Okay, so today we're going to take a look at the stock market predictions for 2026. Take a look at the stock market predictions for 2026. All the Wall Street banks and investment firms put out their predictions of what they think the market will do this year. And of course, they have to do this because when the media or a client asks them, what do you think your outlook is for 2026? It probably wouldn't look very good to say, I really have no idea. So they have to come up with something, and we're going to take a look at whether they're accurate and whether we should pay any attention to them. So first of all, I've only picked out a few of these. There's well over 30 of these. Okay, I do have the consensus down here of the average of all of them. But for example, Bank of America, they think the market will be up 3.7% this year. BCA Research, 6.6, Barclays, 8.1, JP Morgan, 9.6, Goldman Sachs, 11. Okay, you can see these. Oppenheimer thinks it's going to be up 18.3%. Okay, so how reliable are these? And should we take the consensus and have any kind of confidence that they're anywhere close to being right? So let's take a look and see how they did last year. Well, last year in 2025, Bank of America thought it would be up 11.2%. BCA Research thought it would drop almost 26%. Barclays, 10%, JP Morgan, 8.4%, quite a few of them there. Oppenheimer thought it'd be up 18.4%. What did it actually do? Well, the actual returns of the S&P 500 last year was 17.88% with dividends that it pays. Now, before we get into past years, which is really going to surprise you, let me just take a quick moment and say I'd really appreciate if you hit the like button. Maybe leave me some comments below. It does help the algorithm, and I'd sure appreciate it. So thank you. All right. Now, let's take a look at all the past years going all the way back to 2000. Okay. We can see in 2024, what we're looking at here is the round circles. For example, 2024 is 2%. That was the Wall Street consensus of what they thought the S&P 500 would do that year. The blue bar is not really what it actually did. That's how far they missed what it did. So for example, in 2024, you can see the blue bar says 24%. That's because they missed it that far. They predicted a 2% gain, but it actually went up 26% that year. So they were off 24%. That's what the blue bar represents. You can see here in 2022, okay, they're really not very good at predicting, like a bad year because they thought the market would be up 4% that year. They were off 22% because it actually dropped 18% that year. Okay, let's go back to 2013. They thought it would drop 2%. They missed the mark 32%. Are they good at predicting crashes? Well, let's go back to 2008, the global financial crisis. They thought it would be up 7% that year. They actually missed the mark 43% because it actually dropped 36% that year. So you can see they're all over the board on the consensus view of Wall Street. So we really shouldn't pay too much attention to their predictions. Now, let's take a look at some interesting facts of the performance of the S&P 500 because we've had 3 remarkable years. In fact, let me summarize this for you. Since the bottom in October of 2022, the S&P 500 is up 90%. Since 1950, the S&P 500 has delivered 10% or better returns in 63% of years, and it's been positive in 77% of those years. The financial media often highlights these forecasts and stuff like that because they grab attention and investors like it. Okay, we follow this stuff. But they can really be harmful because they can pull investors off of their solid plans. As Jane Bryant Quinn once called it, it's really just investment porn. Now, corrections are normal. Volatility is part of investing, and you should expect it. In fact, early 2025, just last year, there was a 19% pullback. Remember that in April? But it rebounded 41% from those lows and finished up almost 18% last year. In 2020, there was a 34% pullback in just a 4-week period, yet it still finished up over 18% that year. In 2022, the market did drop 18%. So that's a reminder that there will be negative years sometimes. There's always risk. Let's say you're worried about a drop, so you get out. Well, then there's a risk of a missed opportunity. So there's always some kind of risk. In fact, if you just sit on the sideline completely, you're guaranteed to lose money because you're losing money due to inflation. Okay, now having looked at all this volatility, let's take a look at how the S&P 500 has actually done. Well, in the last 5 years, even with 2022 being down 18%, it has averaged over 14% average rate of return. Last 10 years, almost 15%. Last 15, 14%. Last 20 years, 11%. Last 30 years, almost 9%. And last 40 years, a little over 10%. Think of these 30 and 40-year periods. They actually both include the global financial crisis that started in 2007 and ended in 2009. And they also include the 3 negative years of how we started off this century. So even with some bad periods, over a long period of time, the S&P 500 has always done well. And when people talk about the market, they are usually talking about the S&P 500 because that's what they usually use to represent the market. Now, a few takeaways. Long-term success comes from discipline, not predictions. Okay, you want to tune out the noise, all the media. Okay, maybe think of it as just investment porn. Now, market volatility is normal. Use it as opportunity, not fear. When you have a bad year like 2022, if you just keep investing, you don't panic, you just keep investing, you're buying it when it's on sale for a while, and that's going to really help your long-term performance. The biggest risk isn't a downturn like 2022. It's abandoning a sound plan. And stay focused, stay invested, stay consistent, always. And diversification helps reduce volatility and manage risk. Okay, recently, growth type funds have been doing very well because we've been in a bull market, but they will also have the biggest drawdowns if we do have a negative period. So be a little bit more diversified. The more diversified you are, the less volatility you will have overall in your portfolio. So anyway, I hope this has been helpful. Please hit that like button and thank you for watching.